Ladies and gentlemen, a warm welcome to Bilfinger Capital Markets Day 2023. A welcome to the people outside watching us via stream, but especially to all of you being with us today here in Frankfurt. Good to see you in person again. My name is Bettina Schneider, and I'm here together with our Group CEO, Thomas Schulz, and our CFO, Matti Jäkel. Safety first. In a case of emergency, please follow the green lights to the emergency exit in the back to the right, and here to the left. We will now start with the financial figures of 2022. You will have several opportunities to pose your questions. And with this, I hand over to Thomas.
Thank you very much. A warm welcome from my side too, especially here to the auditorium, as well as to our guests online, and a very special hello to all our colleagues around the world where we know they watch that webcast too. So, the year 2022. When we look into, we delivered that, what we promised on the outlook for 2022. We said that we will have a significant increase in the revenue, and we delivered that from 3.7 to 4.3. It shows the attractiveness of our business and especially our business model in the market. EBITDA, 121 we had in 21, and we had with the efficiency program a reduction in the fourth quarter of roughly 62 million euro. That gave us 75 million for the full year. If we look into the free cash flow, we promised to be on the same level. We actually outperformed the level of 2021 with a 136 million euro. The highlights of the year are, we have a growth, an organic growth in the order intake of 14%. We have an organic growth in the revenue of 14%. Our EBITDA margin adjusted, and we do that for transparency reasons and like-for-like check, where Matti will go more into the detail where it comes from, is 3.2%. We have in all countries, all technologies, all industries, a positive market momentum. There was not one area which was not growing and having a positive outlook in 2022. And in that, we have to say that we were more negative up to October in that area, most likely very much influenced about all the discussion of upcoming recession and so on, but the fourth quarter didn't show that. And in the capital markets strategy explanation, we will explain where that comes from for Bilfinger. We have a free cash flow, which is quite an increase of 136 million euro, which makes us actually quite happy, because it's a very good indicator for management capabilities. And we propose a dividend of 1.3 euro per share. The efficiency program, what we announced with a lot of attention, I have to say, in the capital markets, is on track and well under the way to be finalized at the end of this year. The outlook for next year in that market, with that what we do with the company, what we come to with the strategy review, is 4.3 to 4.6 billion for 2023 in the revenue and 3.8 to 4.1 in the EBITDA. Important in our business, important in the so-called being of Bilfinger in the market, is the ESG target set. And we as Bilfinger, if we sell what we do, efficiency and sustainability, we have to be efficient and sustainable too. On the left side, you see the GHG target set, scope 1 to scope 3, what we now report on, up to scope 3. And you see not only in absolute in scope 2 and scope 3, or especially in scope 2, that we actually reduced the CO2 equivalents quite significant, despite having a 14% revenue increase. On the right side, it's about safety, which is an unbelievable important indicator for our capabilities within the industries where we act. The trend, what we see here, is not positive. We move away from slightly from the zero target. we do a lot, and in 23 too, to get that trend back towards the zero. In comparison to the industry, we are actually quite leading in safety, and a lot of clients are trusting us a lot that we help them to improve their figures. Out of that, the orders, if you look on the movement, what we have from 4 billion to 4.6 billion, with a 14% organic growth is quite significant. And it follows a typical pattern what we have, roughly 2/3 in service and frame contracts, very normally longer time in how the contracts are looking like, and then roughly 1/3 in projects. Our order backlog grew quite significantly, and we have a very healthy book-to-bill with 1.07. On the right side, you see the revenue, and the revenue, the same as the order intake, grew 14%, and more or less the same ratio between the service contracts as well as the projects, with 2/3 to 1/3. And with that, I give to our Group CFO, Matti.
Yeah, Thomas, thank you very much. Warm welcome here in Frankfurt and on the stream. This is a great turnout here and on the stream, so thank you very much for taking the time to join us today and listening to us. I think we have an interesting program, not just on Q4, more importantly on the strategy. And as you had the chance to visit our booth upstairs, give you a little bit of a flavor what Bilfinger is really all about. Just to shed some light on the fourth quarter, I call this tailwind. 21% organic growth in orders received, 20% organic growth in revenues. If we think back about 3-4 months, everybody was talking about recession, and it was recession and recession, and it was nothing else but recession. That really subsided in November and then in December, and more so in January, as we have seen in all the publications in the newspapers. We were carried through the end of the year on those growth rates. Gross profit increased to 121 million. EBITDA margin adjusted, and I'll come to why are we also showing adjusted in a moment, 4.3%. Good cash flow above prior year of 124 million. And last but not least, interestingly, the SG&A ratio, which we have reported for the last couple of years very intensively, for the first time below 7%, 6.6% on a high turnover. Looking at the quarterly development of our revenue, you see that Q4 2022 has been the strongest quarter of the last 8, and even compared to last year, a 20% growth rate. All segments, all businesses, all technologies, all the way through growth rates, growth rates, and growth rates. So that in the end, 4.3 billion, a total of 14%. So the growth has increased over the year. Looking at gross profit, 121 million in the fourth quarter compared to 107 million in the last year, for a total of 437 million, quite a nice increase over the 387 million in 2021. SG&A, as I alluded to before, 6.6% in the last quarter compared to 7.8% in Q4 2021. So for a total of 7.1% over year, you see the cost did increase 307 to 291, but that's only 5.5% increase compared to revenue growth of 14%, which took the percentage down. Briefly on the EBITDA, and here is one reason why we also show adjusted. In 2021, as you can see, we had adjustments all the way through the 4 quarters. In 2022, 10 million, that was the adjustment, the provision that we took on exiting Ukraine and Russia. While we stayed in Ukraine, we completely exited our Russian business by the end of 2022, which is driven and has been driven by increase in sanctions. It made us impossible for us to stay in the country and continue to work. Then 2 quarters, 2 and 3, no adjustments. Then we decided on the necessity and the implementation of the efficiency program, and we took a provision of 62 million in the 4th quarter, and you see here that adjustment did hit in the 4th quarter. So for the total year, reported EBITDA 75 million, 1.8%, but 65 million in total for adjustments. That's the efficiency program. On
Capital gain. The capital gain.
Yes.
Yeah, and we had a capital gain on selling a business that had to be reversed. Yeah. So that is that also went into the adjustments. For 140 million, 3.2% in 2022. On the efficiency program that was announced in November, we also had the investor lunch in December. The program in itself has been confirmed. We look at a capacity reduction of about 750 workplaces with a savings potential of 55 million euros annually, starting in 2024. Out of that 55 million, we will reinvest into education and training of our employees, 25% of the 55. So we're looking at a net improvement of around 1 percentage point on revenue. One-time cost of 62 million has been included in the financial year 2022. We're making good progress on designing the adjustments to the organizational structure, and we come to this in the strategy part of this. We're looking at further savings in procurement, and you will see the first improvements of the run rate should be visible in our P&L starting with the 2nd quarter of 2023. Now this is a busy slide, and I know that, but I felt it was important to go into a little bit more detail here, demonstrating why we're also reporting adjusted figures. Starting off on the left-hand side, on the bottom chart, with 137 million in adjusted EBITDA, special items of 121. Then the financial result positive impacted by tax credits or interest on tax credits and the write-up on Apleona for an EBIT of 115. We had huge tax credits in 2021 from the years 2005 to 2009, hence a positive tax number here for an earnings after tax of 123 million. Then here again, a positive impact, 7 million in the discontinued business, also has to do with the Apleona deal. And then on minorities, not much. So EBITDA adjusted translated into a net profit of 130 million because of those positive effects. Looking at 2022, I would say more of a normal year and a normal development, except for the special items, mainly the efficiency program with 62 million, taking the EBITDA adjusted down to 75 million. A normal financial result of minus 24 million gives you an EBIT of 52 million. And then a higher than usual tax rate, because we're not capitalizing tax losses carry forwards in certain countries, taking off 20 million for earnings after tax from continued business of 31 million, and then minus 3 million for the minorities, for the net profit of 28 million. So if we look at 2021 and 2022, you see very different developments, and hence that's the reason why we're also showing adjusted figures for 2022. Cash flow, good operational improvement, quite a bit of an increase. You may remember that in the free cash flow of last year, we had positive contributions from sale of real estate and taxes. So if we compare the 115 to the 136, there is even more operational improvement included in the 136 that you would see on first phase. I think that should be it for the numbers on Q4 and the full year. And as I said earlier, there was a lot of tailwind that carried us through to year end and also into 2023. And how that is going to carry us forward, that's up to Thomas.
Thank you, Matti. So, the market for 2023. And of course, we only give a glimpse here on it, because in the following strategy presentation is a lot of information about the market and where we act in. But a very short view on energy. The energy transition, the volatility in energy prices, drives our customers quite a lot in improving efficiency and in the longer term sustainability. That market is great. Volatility in supply cost, in production cost for our customers always means good business for Bilfinger. Why? Because we can help them to reduce it. We can help to produce more with less. That is our speciality. Another part in it is the revival of nuclear power, what we see as a green energy resource. We are in the demobilization in Germany, and we are involved in the building of nuclear power plants outside Germany. We are leading in helping, supporting customers to deal with nuclear waste, no matter if it's fresh waste or very old waste, like the mine site Asse in Germany. The other big business, vertical industry where we are in, is chemical and petrochem. The customers have quite a fluctuation and volatility on the resource cost, raw material. They have quite a fluctuation on the energy. And at the same time, they have to keep their prices, their products, competitive in a global environment, which is tougher than 20 years ago, which is tougher than 10 years ago. That volatility is a big, big need and demand to help to support them to get that production part stable, and actually that they can forecast it, what the cost is. And here we are as a Bilfinger company in the key, in the core of the industry to help them. The other part is pharma, biopharma. Pharma, biopharma enjoys a deglobalization. No matter that for a lot of people, myself included, deglobalization doesn't sound that nice. In pharma, biopharma, it's very nice, because it means that the idea that you have one or two global big production sites to serve the whole world with vaccine or pills or anything else is gone. Based on Corona, they localize. And localization means fast build-up of smaller plants, what we call modular plants. You have examples here, and we are leading in that container-based fast build-up of highly efficient, sustainable biopharma and pharma plants. With our Bilfinger support is possible. Then we have oil and gas. And oil and gas, there was a lot of negative talk about, and still maybe it is. But the facts are the industry didn't invest a lot in the last few years, most likely in the last 10 years. And now it's the time to invest to get the assets, which are partly a little bit worn down, back on track, especially in 2023, as long as the oil and gas boom is ongoing. And these customers all have net zero targets too. They invest heavily into carbon capture, they invest heavily into biofuels, hydrogen, and so on. No matter that the market in itself is still small, but this is a big market area in the future. And it's one of the products what Europe will be able to sell worldwide in 10, 20 years to come. So the outlook for 2023 from our point of view is positive. But of course, we won't have the coming out of the Corona crisis. So from a growth rate, we have to be more, let's say, humble in it. If we then look into the outlook, the forecast, what we give a forecast up to 4.6 billion euro in revenue, a 3.8 to a 4.1 EBITDA, which brings us, of course, a step closer to the promised target in 2024 to be above 5% EBITDA, and a free cash flow of 50 to 80 million, which is, of course, impacted by the outflow of the more than 60 million this year.
In a changing world, courage, expertise, and resources are crucial. Here at Bilfinger, we are ready for change, ready to meet tomorrow's challenges. We are a powerful partner to our industry customers and aim to become their number one when it comes to efficiency and sustainability. With our end-to-end range of services, we support companies in achieving their goals in these areas, no matter if they grow or decline. We focus on our specialized competencies in the energy, chemicals and petrochemicals, pharma and biopharma, and oil and gas markets. But we can utilize our core competences over all process industries equally. Efficiency and sustainability are particularly important in energy-intensive industries, and demands on them are growing constantly. Increasing our operational excellence offers additional opportunities for Bilfinger to grow. By bundling and standardizing our solutions, we create a unique offering for our customers along their entire value chain, no matter which industry. Across the globe, digitally and through innovation. At Bilfinger, our people are at the heart of this growth. We systematically invest in the training and professional development of our team. We foster innovation and expertise to provide the best possible service. That's how we become our customers' #1 partner in efficiency and sustainability, and pave the way for them to meet their financial and sustainability targets. Bilfinger is indeed the efficiency and sustainability partner of choice for an industry in change, today and in the future.
So, now we start with the strategy explanation and going very much into details. But before we go into that slideshow with all the information and guiding you through what we will transform the company into, I would like to start with that. I started in March last year as the CEO, coming from an industry or from industries by far more volatile than Bilfinger is, believe me that, and by far more exposed to more difficult markets than we as Bilfinger are. What I found is a company with a significant upside potential in supporting customers, in helping them to actually earn more money and to help them to move them closer and on the net zero target set. And I found a company with more than 30,000 highly competent, motivated people in North America, in the Middle East, in Europe, and some other parts what we still have on the list. And I found a customer group who is demanding more from us. And I can be quite transparent here. The first 20 customer meetings I had, there was only one who had one negative sentence in it. All others asked for more, faster, organized, and please help us more, Thomas, wherever we go in the world. That's the world of Bilfinger. But the world of Bilfinger is too that we lack a little bit self-confidence, why ever? And that we are maybe playing from time to time in fields where we should not play because they are not highly profitable or profitable at all or too risky or anything else. That all came fairly quick, like quite a sledgehammer on me in it. But, and that's the but, I was never alone, and we started immediately to work on, to look into how to make a strategy. And we announced it. We had in July already the so-called Team 12, actually more than 12 people, to internal people to look into how to build the future for the company, where to place the company in the future, where to go with all the more than 30,000 people to have our space in the core of the industries. And then, based on that, yes, we implemented a top management, a functional organization from the top, a group executive management, where HR, procurement, products, innovation, the segments, finance, and so on are reflected. 8 people. When we are in one room, the whole company and all the customers are reflected. Because I'm a big fan, and thanks God, Matti too, of simple, less management level team approach in the business. That is what we run for. And I'm very happy that as the newcomer, the new kid on the block, having a CFO with me with more than 30 years experience in that company. So when we look into what we will do with our company is actually nothing really new in total. It's a next step of development. We will put Bilfinger as the #1 in industrial services to help and support customers to enhance them, to earn more money by improving their efficiency and their sustainability. And the market for that is unbelievably big. And the competence what we have is huge and gets further developed. But in a first direction, we have to get our operational excellence under control and done. Efficiency program is the first step. We announced it in November, it will be finalized in December, and we will deliver more than 5% EBITDA in 2024. And then we go on with standardization, bundling, and so on. The other part, which is really new in that strategy, is that we place us in the efficiency and sustainability corner. Whatever is not supporting that will exit the company. If we then look into the financial targets, we will grow 4 to 5% in average per annum for the midterm. And midterm is 3 to 5 years. Why not more specific? In the volatile times where Corona came out of the nothing, where the Ukraine war came out of the nothing, we had some presidents in North America making some issues too, and so on. It is actually not really fair to go on 5 or 10 years specific and to say what will happen. The likelihood is then too low. But here with the midterm, 3 to 5 years, we build it bottom up to show how we achieved it. And you can measure us because it will be transparent and it will be over-communicating into the market. Our EBITDA margin will increase in 2024 to 5% plus, as we call it, and the years after to 6 to 7%. And you will see how it will build up. And the cash, which is so important for us, not only as a financial figure, actually as a figure to drive performance in the company, will be with a cash conversion of more than 70% in 2024 and more than 80% in the years to come afterwards. So, what's the growth, the 4 to 5%? We see in the market where we work in a growth rate of around 2% for the next 3 to 5 years. But we have as Bilfinger what we call a self-propelled growth. And the self-propelled growth is easy to describe. If we start to sell all the profitable products what we have into the existing markets, what we already have, this is self-propelled growth. And we have customers demanding that from us. It is not so that we have to knock on the door, would you like to take? They ask us, you do that here, in that village, anywhere in Germany, why are you not doing it in US with that too? Because it would make our life as a customer of you significantly easier. We can do that. And then in the next phase, we can look to go with these clients maybe out of the territory where we are acting in. But at first, we deliver that what we said with the more than 5%. On top of it is M&A. And one word to M&A. We are interested to strengthen the core of Bilfinger. We are interested, only interested, in investing there, which is supporting us in our strategy. We are not interested to go into new endeavors, not from a geography, not from a technology point of view. We are in the core of the industry and we can gain more. There's a lot of more business to go. And that is where we will strengthen ourselves. Today, Matti and myself will guide you through the overall strategy. Then our 3 segment heads, Jürgen, Christian, and Thorsten, will go into their segment strategy. And you will recognize it is a sub-strategy of the overall. And you will recognize there are KPIs, timelines, clear figures, what we do, where we go, how we achieve that. And why is that the case? We do that you actually help us. And you help us in one thing, because if you look into the KPIs, how we perform, you make actually our organization aware that each and everyone who is working in Bilfinger is contributing to that result. Internal communication, the best is that you have a good external communication. That's the transparency. So be aware, there are quite a lot of KPIs. There are quite a lot of targets in the different action points, what we call lever. And these colleagues will guide you through with a lot of examples what we already do. Because a lot of that, what we say, we already do. Not everywhere, maybe not that well organized as it should be, but that's a strategy for. If we then look into the new normal, sit in a chair of a CEO today. Take any chemical company sitting anywhere in Germany as an example, and compare that with 30 years ago. In between the financial crisis, immigration crisis, Euro crisis, Greek crisis, Mr. Trump, Mr. Xi Jinping, I can go on for hours which kind of high volatility and impact on the business happens. But overall, it's deglobalization, it's overpopulation, overregulation, climate change, the education gap, lack of skilled workers. Yeah, it is all over. And there is no break. You know it yourself. You come home, you open the newspaper, or actually your iPad, and you get the same message what you have in the job. This is where our customers are sitting in. And what is that asking for? Making your own life easier in the business. Because with that high volatility, you still get people like you and other investors, maybe myself, asking for a good forecast that you fulfill it. Everything is volatile, but you should hit a number. So what are you doing? You go out and ask for help, outsourcing, make or buy, partnering up, solution partner. Please, Thomas, take that, come here to Rotterdam, take that and just do it and give me each year an improvement and show me that we get more sustainable so that my overall target for the group, what I have, is fulfilled because I said I will be net zero in 2050. And I don't know how to do that without having a good maintenance, turnaround, consultancy, engineering business from you guys. The world for Bilfinger, our world, my world, Matti's world, all the world of the colleagues is this: investments like hell. Governments, the state of Hessen, where that beautiful Frankfurt is in, is having targets for net zero and climate change and would like to invest. Companies are doing it. This is a huge field. And do you really think it will end in 5 years? Never, ever. This will go on for decades until we achieve that what we want to achieve. And the important part is, yes, it is important to go into new technologies, but it's at the same time more important for the next few years to improve the assets what we have, because all the people are working there and they need income. And there is where we have the CO2 production. And we as Bilfinger are sitting in, we sit on the sides, we have the knowledge, the competence, the digital, the people, we have it. Yes, we have to organize a little bit more standardized and more easy to read, not only for you, for customers too. But the field is great. Let us look into the market. You judge us on verticals. Why ever? The 4 verticals, energy, oil and gas are here a lot, actually more outside than internal, pharma, biopharma, chemicals. This is the addressable market of Bilfinger. In energy, more than 60 billion euro. In chemicals, more than 30 billion euro. In biopharma, pharma, more than 20 billion euro. In oil and gas, more than 20 billion euro. And the growth rates you have on it. And then we have that what we call others. Others. I will come to that, what others means. Others means ketchup, diaper, whatever. You will be actually quite surprised where we all work on. So that growth rate of that market is 2% for the next 3 to 5 years, as we calculate it as an addressable market, a market where we can act in North America, Europe, and Middle East. Not Australia, not Latin America, not China, not India, because that's not our market. If we then look into that special niche in the market, where especially in Germany, the whole world is always talking about it, the green technology. No matter if it's hydrogen, battery plants, biofuels, carbon capture, you have examples on it where we already work on it. This is not new for us. This is absolutely not new for us. But we are in, and we are in with project business, because there is no maintenance business yet, because the plants are yet to build. And if you don't have a plant, you have no maintenance. So we are in that business with the project, and that is what we will do in the future too. Why? This is one of the main products what Europe will sell in the world in the decades to come. That is where we are leading. That is where everyone in the world is talking about. And I know definitely what I talk about, because my whole career, I did actually in most of the part of the world except Europe. And they know that Europe is green, and they know that Europe is on sustainability, and they know to look into Europe to make that happen. And that's the reason why a country like India, with 1.4 billion people, has a green deal with Denmark, with 5.5 million people. Nice greetings to my Danish colleagues. So out of that, what is it, what we really work on? It's the horizontal market, because it doesn't matter which industry. If you have pipes, if you move gas and liquid, and it's complex, it's us. If you have high energy cost, it's us. If you have complex work with thousands of pumps and electricity and a lot of people around where you need education, it's us, it's Bilfinger. That's a horizontal market. 80% of that, what we do in all the industries, is similar. Which means I can move, we can move our people from one industry to another if one industry goes down. But that is not happening, because if an industry goes down, they call us to help us to get down with the capacity, because these assets are billions of value, and no one comes on the idea to say, I shut them down. You saw that when the gas from Russia was gone, and everyone said, oh, then we take gas from Northern America. You know that each gas is related with the deposit. It has a different chemical setup, so you have to treat it differently. Who did they call to make it happen that you can take gas from Northern Africa? Bilfinger. That's exactly what we work. That is the vertical. 80% is equal, similar between the industries. 20% is domain knowledge. If we weld on pipes in nuclear, then you need specialists for nuclear welding. That is what we have too. If you build biopharma and pharma, you need specialists out of our Salzburg office to make that happen, and they do that very well. That's the domain knowledge. And that domain knowledge we have to be able to offer to each client in North America, Europe, and Middle East. And other companies are doing that for decades over product centers, and we will do so too. That's functional organization. That's the efficiency program, nothing else. There's a clear plan how we realize it in steps, where we deliver, where we have milestones, so that we engage the people and make them accountable and getting the self-confidence up. If you then look on that slide, you see on the left side the frame and service part, which is the recurring, low risk, actually quite profitable business, what we really love, and the project business. We will decrease the project business from roughly 1/3 below 20% in the future. And we will do projects, as I said, for the green technology, and where long-term customers with a potential for maintenance, for engineering, consulting work afterwards, to help there with their investments. And that is where we are really great in it already today. That's our world. Our world goes from consultancy to help customers to come on site and to tell them how good their site is. Not everyone likes that, what we say, I have to say that. To engineering, modification, maintenance, supported heavily by digital products. And there we are on the innovation. We as Bilfinger don't need to develop rocket science. We utilize startups, universities, well-established high-tech companies and combine it to a product what we need for our clients. You have an example with NDT, drone-based, on the upper floor here. Watch. Each thing is an own innovation from a company. And we as Bilfinger combine it to offer it to the clients. And they are more than happy about it. If we then go on, so what do we offer? The value chain you got. We are more than 30,000 people in 27 countries. More than 90% of our customers are buying more and purchasing more than once from us, which is very nice and very healthy, a stable business. We are organized in 3 segments. And we are roughly 70%, actually last year a little bit less, Jürgen, not 70%, 67% in Europe. And then the others more or less equally around. Which shows we have huge potential in North America and Middle East because they boom, and the colleagues will tell you why they boom and how they boom. If we then look into the customer again, if I would sit on your place, I would think, yeah, sounds nice, but is really the market ready for that? Yeah, the market is ready because customers develop. When I started with my career in the 80s, last century was that, sounds very old. When I started my career in the 80s, what was important in service? That you knew the customer, that the customer knew you, and that you had people on site. That's it. And a little bit technical competence. And then it was growing in the technical competence. Then on top of it, digitalization came. And digitalization didn't come 10 years ago. It was already before there. We didn't call it like that. We called it automation. So out of that, we are now in the digital phase. And now with all the volatility, what they have for their production units, wage increases, resource increase, energy up and down like a roller coaster. And then they have to have a product which is always priced the same and, if possible, competitive to the Chinese and Indians and who else. That is efficiency. They run for improved efficiency. Make my backline stable and each year an improvement in cost. That would be great. And the next thing is, with the EU taxonomy and the whole world regarding the climate change, is the sustainability. They all have net zero targets, all. How to achieve them? The OEM suppliers, the big equipment, where I worked before quite a long while, they make roughly 60% of the sustainability on the side. Who is taking care of the other 40%? Who is doing that? With thousands of small business here and there, highly complex, not high-tech everywhere, but highly complex. We as Bilfinger, we can go out and say, come to us. If you buy 1 or 2, you can get the full package from us. And when you look to the right side, that is what we do with our company. We are today working in an efficient, little bit sustainability-related area, as you see on the y-axis. On the right X, on the X-axis, you see single trade. What does it mean? Single trade means if we compete with a mom and pop shop, with all respect, in scaffolding. Of course they are cheaper. Of course, they are sitting around, they have no headquarter, they have no stock market, they have no internal, external communication. Very often, the CEO is the papa and the mama is the CFO. So that's the thing. In all respect, great business, great people. But if you would like to work on efficiency and sustainability, this is not enough. This is not enough to get really a step ahead. For that, you need to combine the business. You have to make, in that case, ISP. Why? Because then you get the advantages regarding sustainability and efficiency. If we can build scaffolding and immediately putting the insulation in, we can be up to 2 months earlier in the energy reduction with that system what we have than anyone else. 2 months of 2% less energy cost on a big chemical plant, I can tell you, it's a double-digit million euro figure. And we are not getting a double-digit million euro figure paid for. That's a little bit of pity. So that's our part where we go in. High profit, high entry barrier, Not a lot can do that. If you play in that area, you have hundreds of competitors. And you know, if you have hundreds of competitors, your profit margin is low. We go here, and others can follow us, and there we are, maybe a handful doing that today, partly. We have in our area the best offering for it already. So what I'm talking here about is actually that we look into that what we have as single trade, scaffolding or insulation or painting or consultancy or. We have to combine it into an and at the end as a together. And that is the multi-trade and then the solution partner, where we have already today clients coming to us and saying, I don't want to look into that. I don't know how to deal with it. You take it. We go there, you just take it. The only thing what we have as customer is each year you prove that you go down in the cost. And we make open book policy. We say whatever cost we have, how much money we earn, we can make open and transparent, no problem. That we are, because we sit in the same boat. But if you have a higher profit, I get more money. If you don't have a higher profit, we work both on it to make it happen that I get more money. That's the model. Are all the customers asking for that? Not today. But when they come to the net zero target set from a timing, close to it, and seeing, oh, bad, we are very far away from it, then latest, we are really top in it. And we do it already today. Solution partners, we have quite a lot of customers doing that. Multi-trade, we have a lot who are doing that. And single trade, of course. But if someone buys from us a single trade, one product only, they know that we know the other products. And then they know if they make a mistake, we will tell them, I would not do it like that. You should do it like this and that. We can help you. That's the competence. And it's not for free. If we then look into our business model is built that we enable customers to earn more money. That's the business model. And that is the vision what we have, to be the number one. The number one is not the most beautiful, intelligent, or the biggest in revenue. It's the one where the customer says they are the best competent company in efficiency and sustainability improvement. And that is where you earn the most money. And with our step of 6 to 7%, we are in the upper quartile, the upper 20% in that sector in North America, Europe, and Middle East from a profitability. When we then go into how to do that, because that was the starting, how to do it. In a strategy, it is important that you have clear action points, transparent, and with clear target set on time, on where you have to look, who is doing it, when they are doing it, and so on. And we call that strategic levers, and we divide them into 3 pieces. Efficiency program. And in that efficiency program, functional organization. The second is operational excellence, standardization, bundling. And the third one is positioning. As I said at the beginning, when we go into markets like North America, where we are not offering a lot of the great products what we already do with the same clients in Europe, very profitable. That's market expansion on the product offering. This is self-propelled in the growth. So when we look through these different strategic levers, you will see them several times today, of course, because what we set for the group, the segment managers choose and pick what they need to make their segment into that financial area, what we demand from them and what they are able to deliver. So we track that on, what is it? I take here in the efficiency program the functional organization, which will be done and implemented up to the end of this year. It will impact the profitability. Timeline is 12 months. You can judge us on it. Competence development, unbelievably important. We have a lack of skilled labor. They talk about schools, and I don't know what they all talk about. We need to educate our own people more. Why? Because they can do it. They are intelligent, and they are willing to do so. And it makes us more competitive. More competence, we are significantly better in efficiency and sustainability improvement, makes us more attraction towards all any other peers. With that competence in the value chain what we have, great. So we move with that into the position number 1. Then procurement. in the new sustainability world, in the scope 3, you look to your clients and you look to the back, to the ones who supply to you. You know, when we look, I come later to that with how much we cover of the CO2 with our own company, because that's very tiny. If we then look into competence in itself, because that's always an important part, we will invest more than 0.5% of the revenue each year onwards. And it's calculated into the figures, what we presented as financial targets, midterm and for 24. On top of that, what we already do. Why? Because it increases our competence. It makes us more attractive. It makes actually more fun with our own people when you see that they grow and they want to have a career, they want to learn. And this is not white collar only. This is actually for Bilfinger more on the blue collar side. And we have great developments, and others would like to have it too. And it makes for younger people really fun if you take a German welder and send him to UK for education and then on a plant in the Netherlands to work on. Bilfinger can do that. We can offer that. You see here our colleagues on the roping. This is highly attractive for young people because if they get our education, they actually can go, no, I don't want to have you in the Himalaya, but the Alps would be actually quite nice. That is what we can do. This is competitive advantage to attract good young people being willing to go out to the industry and to help to make sustainability and efficiency happen. Not sitting on a sofa and having nice speeches, really going out and doing it each day, each second, each minute. We can do that. And of course, we as an employer of choice, if we are placed there, this is a hell of a good branding and makes us towards our clients unbelievable attractive. If we then look into the operational excellence, the next package of levers, there we have standardization and bundling. Standardization is not only product standardization. I'm an absolute fan of standardization. You would not imagine what I standardized in my own life. Standardization is fantastic. It means that you focus on that what is important and not to reinvent a thing what already exists 3-4 times a day. You take that module and you put modules together and that is what you work with. As an example in shared service, as you mentioned it, Matti. If we have shared service, they all work the same because if we then have a labor shortage in shared service location A, I can take people from B and putting them in. That's it. That's standardization. Standardization gives you, as an employee, free time to focus on that what is most important, the customer, and to generate profit. You don't need to reinvent a product. They are already standardized, and service products are definitely capable to get standardized. Our Team 12 proved it and worked that fantastically through in the last 6 months. De-risking. We want to be in a business which is low in risk. We don't want to go into a business where we don't know what comes out, and then at the end we don't have any business afterwards and only paying money for it. This is not what we want. De-risking. Matti will talk more about it. Digital and innovation. I said it before. We combine high-tech from others into a product for our clients, as we have it with the entity, the drone, and the people upstairs, what you can watch. That is for us innovation. We don't have an R&D department. No. We look what is needed, we call partners in, startups, universities, big technology companies, and then we take the best of them, combine it and make a product out of it. That is competitive. That is highly competitive in predictive maintenance to help customers, to tell them months before a disaster happens that they can still avoid it if they let us on the site and doing the right work. If we then go to positioning, positioning for us has 3 elements. Market expansion. I talked about that we sell all the products what we have in all existing entities. That alone is a hell of a good self-propelled growth. But as a next step in that market expansion, we would like to go with our clients when they go into what we call adjacent market. If we have a German chemical company, no, I take now biopharma, a German biopharma company, and they would like to do something in France, why are we not going? Come on, it's only a virtual border. I'm from Région de la Sarre, I'm half French. Not a problem to go over and to make the business. We will do that when we are done with the efficiency program, operational excellence, and getting all our products in existing countries sold. Then we go into the next step. But that is in the 3 to 5 year scope. Sustainability partner. In the future, you will see, in 10 years, you will see that clients are actually not asking for, I need scaffolding, insulation, or anything. They will ask, I have that CO2 tonnage equivalent, and you have to help me to get that down, because otherwise I pay tax like hell. There are industries like cement. If the EU CO2 cost is coming through with 130 euro, they will have a problem to have any profit left if they are not dramatically improving their CO2 setup. And that is not in cement, but in all industries. We can help them. We can go in and making their life simpler and showing them an improvement track record over years by utilizing our competence, our products. And we can measure it in CO2. You will see very quick, and we already do it partly, not everywhere, that on each quotation what we send is a sustainability part, if the client wants it or not, because they will grow into it. And then when we say we do that consultancy, it will save you the following energy cost. That means in your energy mix, that reduction in CO2 tonnage. And we can say that money per ton, what you pay to us, is your reduction in CO2. And with that, they will go out and getting a better rating towards their clients and towards their employees and towards their societies where they have the plants in it. We as Bilfinger, we can do it already today. And the last thing is, if you go out and tell people how to do better in efficiency and sustainability, I think it's clear that you have to be on your own efficient and sustainable. No one would go to a dentist having only black teeth, minimum, not myself. That's exactly, you can smile about it, but that's the truth. Customers look into that, how your setup is. If you tell a client, I'm offering you efficiency, and then he has to call 20 people to get one answer, do you really think they believe us? Not a second. Internal efficiency is unbelievably important because you create an environment of efficiency and sustainability, what you then put into the business. So, what does it mean for us? We committed to the SBTi, science-based target, the commitment to the 1.7 degrees Celsius, and we work on it. And no matter what people say, it doesn't matter if we achieve it or not, we have to work on it with everything what we have. But we have to earn money on it. Otherwise, it will not fly. The second thing is, we will have a full GHG reporting in 2025. And then for 2030, carbon neutral, and for 2050, done, net zero. And you will see most likely these time targets will change in getting shorter. But over the time, you develop and you see what you can do more, as we see it with our clients. On the top of the page, you see 4 of the 17 sustainability development goals. And as you may know, I was my whole lifetime in chemical, construction and mining. And the former company I worked was mainly in mining, 70–80%. And I was actually nominated in 21 as one of the sustainability managers of the year in the most green country in Europe, Denmark. And how? Because the same what we do here, we focus on some areas of the sustainability. If you focus on everything, you don't focus at all. We can contribute and making a real change in 4, 7, 8, and 9. Of course, we do in other sustainability goals a lot too, but this is our focus package. And one part of it is what you see on the right side, the EU taxonomy, which is not that easy to understand, to make it nicely, is not covering a big part of the industry, surprisingly, and absolutely more or less, I think, less than 0.1% of industrial services, when we are actually on all the industry and all sides. So that will not help us to get transparency to you and to drive the performance and development internally. So we classify, as you know it, in A, B, C, D. Where do you know that from? In the private life, refrigerators, heaters, whatever. It's actually fairly simple classification, and we use that too. We have today less than 10%, actually around 5% of the business which is not showing an efficiency or sustainability improvement. That we will exit. It's not about selling big companies or so. It's a business down here, not doing that business there, labor lease not there, and so on. Then we have roughly 3/4 of the business in the C class. The C class shows for the client clear improvement in efficiency. But it's quite a bridge to build to show what really the sustainability is. We will do that. If we do, coming back to my beloved scaffolding and painting and insulation, if we make a 2% energy reduction, we actually can calculate how much tonnage of CO2 we save for the client. That is then the class B. And the class A is the green technology, when we work on hydrogen, carbon capture, biofuels, not LNG. Not LNG. But in that area, we invest a lot by doing more and more work because we have a lot of competence, and we will move Bilfinger in that picture, with that business, what you see with 77% in 21 and 73% in 22 towards the A and B class. And the future Bilfinger will be an A and B. That's where we will position the company in it too. And you see that we already did in 2022 quite an improvement in that area. And nuclear, for us, is a green technology, to make that clear, because we are in Germany. So, out of that, that is the overall what we do with the company. To set it up a little bit again, we have two main directions: efficiency program, operational excellence, and the new positioning into the efficiency and sustainability. That's the Bilfinger, what you will see in the future. And with that, I give to Matti, our CFO.
Okay. Thank you, Thomas. Let's take a breather.
You?
Global warming. Huh? Good. So, how does that, what Thomas explained to you, translate into the financials? A brief recap. Growth rates, what we expect in the midterm, 4 to 5% revenue growth over the next few years. EBITDA margin, 5% plus in 2024, and midterm 6 to 7%. Cash conversion increase 70% 2024, and then 80% as we measure cash conversion, free cash flow divided by EBITDA. Looking at the starting point, and if I exclude 2020 as sort of the COVID year, our operating platform is about 3% EBITDA. Are we happy with that? Certainly not. If I look at the competencies, at the reputation, at our people, client relationships, and so forth, 3% is not where we should be operating. So there's significant profitability potential in what Thomas showed you in terms of better efficiency, operational excellence, positioning. This is how we see that we can develop and improve our EBITDA margin. So that's our journey for EBITDA progression. The efficiency program will deliver 1 percentage point to the bottom line by the end of 2024. Program initiated this year, implemented 2023, full run rate improvement in 2024, 1 percentage point. Operational excellence, midterm, 1 to 2 percentage points. Again, this is something that is on us, in our control. That is us to become better and more profitable. And then positioning, another percentage point in the midterm. A little bit more flavor on the details. Standardizing core functions, creating a functional organization. Shifting transactional tasks to shared service centers. Nothing new, something that's already at work in Bilfinger, but there is more to be had, and I come to this in a moment. Optimizing our IT. We've spent a lot of money in the last few years, which was one of the reasons for adjustments in the past. We have built the foundation for a much more efficient and effective IT. This is something we need to deliver on. Procurement. We have instituted category management, but there's more to be done to drive the maturity level up in supply chain. Also, make or buy. What do we do ourselves? What are we buying? For example, in IT, we are still performing low-level basic services ourselves. Nobody does this out there. Where you are all coming from, standard is you have a service provider. That is what we're looking at to implement in Bilfinger. Have we made progress in the past on SG&A? Sure we have. From 8% in 2019, pre-COVID, we're at 7.1%, 7% in 2022. That should improve to 6%, and midterm, the expectation is that it's less than 6%. That would put us into the upper quartile of our peers. Why is the efficiency program so important? If you look to the left-hand side, we still have quite a number of, I call them operational silos. Do we have HR in each of the legal entities? Yes, we do. Is HR performed in a standardized, similar way across all our operations? Not yet. That is where we will. That is where we are working on with the efficiency program to come to a situation where a function, an administrative function, is done the same way, no matter where you are in Bilfinger. Standardization. You can then move people from place to place, and they still find, okay, here is Bilfinger. I know what to do. I know where to find. Shared services. We do have shared services, quite a professional shared service center in Germany, in 2 locations. We have similar organizations in other countries. Are they working the same way as the one in Germany? No, not yet. Okay, so let's get it standardized. Make sure that we have shared services across all our operations. Support them so they can focus on what's important for them, sell and execute. Operational excellence. Very close to my heart, having been in the company for a long time. We can do better. Number 1, de-risking our contract portfolio. Right now, as you have seen on the numbers for 2022, the revenue share between framework contracts and project contracts is about 2/3 to 1/3. There is so much more work to be had in frame and service contracts that we can allow ourselves to rebalance our portfolio, de-risk the portfolio, make it more visible, easier to predict when we go to a percentage that's more in the 80 to 20 area. Why is that important? Look at the frame contracts. They have an average tenure of between 3 and 10 years. A project has a duration of 6 months, 12 months, 15 months. And you need to constantly go out and bid in competition. That's different on the framework contracts. We have a repeat rate of 90% plus. So when we are on an installation, on a site, and we are the incumbent contractor, and the contract term comes to an end, in more than 90% of the time, we get the renewal, the renegotiation, the extension. You can call it what you want. It's repeat business, year after year after year. The longest tenure with one client is 80 years for Bilfinger. And Jürgen will show you later on about a relationship that is 50 plus years, on and on and on. Standardization, uniform product definition drives productivity. That's not a secret. That is what everybody does in a production environment. So why not us? We can do this as well. When we standardize and when we bundle, we have instances where we work on the same site for the same client with 3 different services and 3 different contracts and 3 different teams. Does that sound efficient? I don't think so. So bundling the service under one contract reduces interfaces for ourselves, for the client, for everybody else. Gives us profitability potential. Digitalization in processes internally drives performance. We do use quite a bit of robotic process automation. Simple things, very simple things. In Norway, which is a little more advanced than Germany on digitalization, a little more, yeah, you have the right and in future the obligation to send all your invoices in digital format, right? How do we do this? Or how were we doing this in the past? Well, you produce your invoice in SAP, you print it out, or you make a PDF, and somebody sends an email. No more. This is routine, mundane tasks. It's boring. We have a bot working. Once the invoice is created in the system, the bot makes sure the invoice gets to the client. Yeah? Faster time, helps you on working capital management, helps you on efficiency, and so forth. So, a little bit more flavor on contract selection and execution. This is the heart of our business. We're a contractor. So, we are working on contracts. Opportunity selection, and I think a lot of this has been talked about already. But we have set defined risk criteria. What are we willing to accept and where are we not willing to go? This becomes very important when you're tendering, when you're negotiating, when you're sort of out there hunting, trying to win the new work, trying to win a new contract, trying to convince the client of our ability to help them with efficiency and sustainability. But let's make no mistake, we're in competition. So when you tender, when you negotiate, you must remain steadfast within your risk corridor. That's extremely important. It is being tightly controlled within Bilfinger. For sort of the finance guy, the most beautiful contracts exceed the margin that we plan and the cash that we plan. It's not the nicest picture on the marketing brochure. Delivery capabilities. This is about, when we enter long-term relationships, it's almost about a marriage. Do the capabilities of both partners fit together? We know what we can deliver. We know what we can do. But we need to ensure that the client understands what we can deliver and we understand what the client can deliver. If you look at large construction projects, that is where it oftentimes fails. And then you get into long-winded tail risk discussion about who is at fault and so forth, and typically the contractor is in a weaker position. So make sure that when you get together, you know each other. And then the last one is probably more speaking to myself and our organization. KPIs, performance measurement, performance measurement, performance measurement. Yeah? It is key to success when it comes to contract selection and execution. Market positioning. We're talking about, in the first part of the journey, we're talking about scale effects. So, as Thomas explained, we're in a location, we're selling certain services to the client. We have the ability to offer the client more services. Do we need a new organization there? No, we don't. We have one. Do we need new people there? No, we don't, because we have people there. So that will help us add another percentage point. If we look at the sustainability partner aspect of the strategy, this will change our product mix. We will have a higher share of planning, project management, engineering type resources that we're selling within our contracts. That gives us the opportunity to command more and better prices. So, hence, more money to the bottom line. As we have more responsibility, we have better control over our workforce on site. It's very expensive if you have 100 or 200 people on the ground and they are standing idle. If we are reactive, waiting for the client to tell us what to do, that tends to happen. Are we getting paid for this? No. Going forward, we have more control over this. And obviously, on being sustainable ourselves, we look at cost savings. You have seen the reduction in CO2. We will change the energy mix. We have put in place and are putting in place solar panels to generate electricity on locations that we have. And that will also help add to the bottom line. Now, even more important, cash conversion, which is an efficiency measure, as you well know, on how you utilize your working capital. We look at making improvements there. The main driver for cash generation will be profitability, obviously. But then working capital management is another part of it. Have we made improvements? Yes, we did. We refer to NTA, which is net trade assets. Others refer to trade working capital. These are terms that you can use interchangeably. We've made another good progress in 2022, where the DSO reduced from 67 days to 62 days. But that's the year-end view. I'm of the opinion we need to look at average, because that is when you bring your working capital down. So here we're looking at the average NTA as a percentage of revenue. We've made progress there from 14.5% to 12%. There is more improvement to be had through the levers that we talked about. De-risking contract portfolio that enforces a faster cash generation. It doesn't take months and sometimes years to negotiate the final settlement and the final payment with the client. Standardization of our offering or the positioning. All of this will optimize our billing process. In Germany, in 2022, we have sent invoices with more than 100,000 individual billing items. That's a huge administrative effort. Selling bundled services will reduce this substantially. Makes it a lot easier for the client to check the invoice, sign it off, approve it, and move the money into Bilfinger's bank account and not the client's bank account. So as a summary, we're looking at revenue growth, continuously. We're looking at EBITDA progression. We're looking at cash conversion. All of this will enable us to have a net profit that allows us to continuously grow our dividend. You have seen the proposal for 2022, €1.30 per share, which is up from €1 as the floor, showing our confidence in our ability to deliver what we have and are showing you today. Investment grade rating has been extremely important to Bilfinger for a number of years. We're not giving up on that goal. Investment grade rating is important and remains important to us. It forms an important part of our financial policy. So, continuously growing dividend, funding organic growth, funding M&A, if and where it makes sense, to support the implementation and delivery of the strategy. We spent €100 million in 2022 on a share buyback program. Are we going to do this year after year? No. But share buyback is a tool in the toolbox when you think about creating total shareholder return. So if and when it's appropriate, that's something that we will address and communicate. With that, I think I'll turn it back to Thomas.
Thank you, Matti. So, as Matti laid out, these are our financial targets, 24 and 25 to 27. And you will see after the lunch break, where you please mingle with the technical people upstairs. And I don't know if it's allowed, but if some would like to rope a little bit.
No, you need 3 days introduction. So, if somebody has time for 3 days.
So, no, to be serious. Yeah. I hope you see that this strategy is built up from the bottom, clearly over action plans, clearly over transparency, clearly over KPIs, over timeline. As I said before, it is important that we are that transparent and communicative on it, because your comments each quarter and each time we meet, how far we are, we can report on it, you can track us on it, and it will drive our internal performance too. Because with that, we will lift up the accountability and all our colleagues will see which great job they do each day to fulfill these targets. If you have only one target, like return on capital employed, it's fairly difficult to explain a colleague out of the blue-collar area which kind of impact they have on the return on capital employed, which is reported once per year. That's not working. That drives accountability, and that puts us with self-confidence into the market, where we have a big competence and customer relation, all opportunities to be in the core of all the industries. No matter if we produce ketchup, which is nothing else with a lot of pipelines, where a liquid, which is red, getting pumped through with some wear in it. If we produce raw material for diapers, which is a liquid where you have pieces of paper or wood in it.
Pulp.
Pipes.
Pulp.
Pulp and paper, as you maybe know. And, or if you go into vaccine production and little pills and, yeah, vegan cheese, what we will hear today about what that means to replace cows on the grass field. That is where Bilfinger is involved too. And no matter that we smile a little bit when we talk, we are unbelievably proud of our people doing that. We are unbelievably proud that we are in the core. And that will drive motivation and our self-confidence to achieve that, what we have here. So our strategy to move the company into that right upper corner will happen. That's a given. It will happen that we make the operational excellence, and it will happen that we position us there. And the mood and the tailwind what we have in the market, in the organization, is significantly bigger than we see at the moment the market momentum for us in the growth and that what we can do. Welcome back from lunch. And now we go more into the details. Actually, we go into the segments. And in the segments, you will see the market, what we do today, what we will do tomorrow, and which kind of strategic levers we will trigger to achieve that. And very important, our segment heads will show you examples of existing business what very often was already announced, where we do already that, what we target for the whole group. And the first one is AM Europe with Jürgen. Your stage, Jürgen.
Thank you, Thomas. Thanks. Good. Afternoon, everyone. Thanks for coming back and joining us in the afternoon. Appreciate it. My name is Jürgen Liedl. I am Executive President of the segment Engineering and Maintenance Europe, so E&M Europe. I'm with Bilfinger for a little bit more than 10 years now, and I'm also part and member of the Group Executive Management Team that you've seen at the beginning. What I would like to share with you in the next 30 minutes is what we aim to achieve within E&M Europe in the next few years, how we are going to achieve it, and why we are confident we will achieve it. Let me start with the what we want to achieve with the financials. The segment E&M Europe, it covers about 2/3 of the Bilfinger revenue overall and also 2/3 of our workforce. So it's really the backbone of that company. Yes, the volatility in our markets has increased in the last few years, but we do see underlying developments and market drivers that makes us confident that our addressable market growth is going to be on average 2% year by year by year, what you can see here in the midterm CAGR. We're also in a very good position due to our current coverage already that we can benefit from that above average. So we will add another 2% self-propelled growth, and that brings us to about 4% year by year growth that we're targeting despite volatilities that are out there. I will come to that in a minute, explaining how we manage those volatilities and how they, in the end, also add benefit and opportunities for us. Looking at the profitability, the segment E&M International has generated a 5% EBITDA margin last year and also a 5% EBITDA margin the year before. That is good, but that's not where we want to end up. So we have a plan in place that brings our profitability, our EBITDA margin, midterm to 7.8%. What are the individual levers or steps to do so? And I will also explain in further detail later. It's the efficiency program that Thomas and Matti have explained in the morning, that we will of course also roll out throughout Europe. So further strengthening the functional organization, standardizing administrative work, bundling things, transactional works especially, in the shared service centers, so that the business can concentrate on what it should do, i.e. the client and the business. And in addition to that, we will further work on increasing our operational excellence. We want to grow in profitable segments, so that will add another 1 to 2 percentage points over the next few years. Let me talk about the markets. And Thomas has shown and explained the kind of new normal that we, our peers and our customers are in. What are the specifics for Europe, especially in the engineering and maintenance geschäft? Again, it starts with inflation. I'm sure you have heard a lot about this. Inflation is something that has kept us busy in the last 12 to 18 months and will continue to keep us busy. The wages of our workforce have increased, depending on the country, between 4% and 12%. Raw materials like steel have gotten more expensive, also insulation materials. The good news is we have been able and we are able to pass on a big chunk of that to our clients. Two reasons. The first one is because we have contracts in place that allow us to do so partially. And the second one, that comes with the labor shortage. And that brings me to the next lever, labor shortage. This is something that has been in our industry there for quite some time. If you look at the average population on a chemical plant, on a steel plant, on an energy plant, it's not the 25-year-old. It's more like the 55 years old. So attracting and retaining qualified labor is something that is a task for our industry overall, and it has been. Now, what has happened since the COVID time is that the mobility of workforce has also decreased across Europe. In the past, and still, people from Romania or Poland, they travel to do work, they commute to do work in Belgium, in Netherlands, and Germany, in Scandinavia. As the wage differences between those parts of Europe is getting smaller and smaller, the excitement of the Eastern European workforce to do that is going a little bit down. So that also, in addition, creates labor shortage. Now, what's the way out of that? Efficiency. Efficiency, efficiency, efficiency. And that's also the discussions that we have with our clients. It's a limited amount of labor it's a limited amount of labor that is available. The labor is getting more and more expensive. And we work together with our client to apply that labor that is there in the most efficient ways. And again, we are in a good position to do so. That's also why our clients are willing to pass on, to take on inflation effects from us. And that you can also see, if you look at our EBITDA margin in 2022, it's not heavily affected by wage increases. We have maintained the same EBITDA margin level as we had the year before. And that also brings me to digitalization. I hope you have seen and talked to our colleagues up there, and they have, Dennis and his team, somewhere, have explained to you on how we are bringing out the paperwork from the operations on site and how we increase the efficiency in the administrative work, but also in the operational work out of that. We will continue to do so. Deglobalization, number 4. It's something that we are seeing as the supply chains of our clients is getting more and more disruptive. So we do see productions being shifted closer to the customers. And that means modifications of plants, and that means also new investments. And again, that is a revenue stream for us. Yeah? And you may cite the German chemicals industry now not importing any gas from Russia any longer. Like 12 months ago, that was still 60% of the feedstock for gas was coming from Russia. As per today, it's 0. That means our clients, they need to modify the plants. We are there to do so. We also see biopharma, and Thorsten will explain more about this afterwards. We see quite a lot of pharma and biopharma investments in Europe. Once these plants are operated, someone needs to maintain them. We are there to do so. And we also see similar things now, first sites being built again in some chemical clusters in Europe in the chemical industry. So that helps us. So overall, that leads us to a market growth of about 2% year by year that we expect. There are some specifics. I was mentioning biopharma, where we are sure it's going to be an above market growth. Chemical industry was the big question mark, not only for us, but for everyone, especially in Germany, with inflations in gas prices and the questions about availability of feedstock. As you have also seen in our order intake now in Q4, that has proven much more robust than we were concerned about. So this industry we see more stable than we have expected, which is good news. And this industry also invests a lot now in sustainability, in changing their power supplies and these kind of things. Oil and gas has seen quite a big catch-up effect in the last year out of the COVID crisis and oil and gas crisis. We are positive that if you look at carbon capture projects, if you look at changing the gas infrastructure from conventional gas to hydrogen, there will be quite a lot of work in the European oil and gas industry for the next 5-10 years, and then we will take it from there. But in the meantime, of course, we are aiming at limiting our exposure to that industry. So overall, 2% growth in a volatile market, because many of those dynamics are speaking for us. Now, we are adding 2% of so-called self-propelled growth. Why are we confident we can grow above the market average? In the end, simple reason is because we are already today the number 1. You will not find a lot of service providers in Europe who can cover that whole value chain, from consultancy to engineering to modifications to maintenance and turnarounds across all of those industries. So we're active in chemicals, oil and gas, energy, pharma, biopharma, and others like steel and so on. And we are active in many countries, but not in all countries. And if you look at our strategic markets, so the countries with the dark blue, in Germany, we are the number 1 in the industry, and independent reports confirm this year by year by year. In all the other dark blue countries, we are already between the first 3 of our market players. So there is good potential to do even more. Another specific things, Thomas was explaining the horizontals. If you look at E&M Europe today, 75% of our work is framework contract. So again, we are there on the sites for years, if not decades. We have 3 to 5 years framework contracts, and usually the client expands them. So that's why 90% of our work is repetitive, if not more. And we know the clients. There's a big intimacy between us and the clients. We know the sites, we know the players. We are there, we are aware when things are changing, and we are investing. All of that is also reflected if you look into the financial development of the segment. Revenue is now close to 2.8 billion, so above pre-COVID level, with a good catch-up and some nice entries into new products in the last 2 years. Our EBITDA margin is 5%. So we have managed to catch up and be even better than before COVID in 21, and we have confirmed this now and delivered this again in 2022. Again, is it where we want to plateau? By far not. We have a plan in place to grow that further to 7 to 8%. How do we want to be in the future? We want to do more of all of those good things that we are doing with new clients on new sites and also in new countries. So you will see that we want to fully cover our maintenance and turnarounds portfolio in all of our core markets. Market is always a combination for me between country and industry. We want to significantly grow in the engineering, but also in the consultancy, because that allows us to provide higher margin services and higher value services. We will hold our position in new builds and modification, coming back to what Matti has explained, to manage our risk portfolio. And you don't see any major changes in the verticals, in the industries that we will address. Yes, as I said, we will reduce our dependency on oil and gas. We will focus more on our core industries. So oil and gas is going a little bit down compared to the previous page. Others is going down, and we will grow that more in pharma, biopharma, and energy. What we will also do is, selectively enter into new countries, into adjacent countries. So we want to be present in more countries, going there with our customers for a product, for a service, for a client where we are confident and comfortable that we will do this. What are our strategic levers? And you've seen all the strategic levers in the presentations in the morning. I would like to address the ones that are of, I think, highest significance for E&M International, and not walk you through all of those levers. What we did, of course, we took the levers, we said, okay, what does that mean in detail for our business in Europe? Where does it have an impact? Some of them growth, some of them profitability, you see it on the chart. And what's the timeline for that? I want to start in the middle, digitalization and innovation. Sorry, not fully in the middle, a little bit above the middle. I want to start with standardization and bundling. Why? Again, we have one of the broadest coverage in the industry on those sites. What we will do more and more is develop a standardized way of executing also the operational work. So not only what we will do in administration, we will do something similar also in the operations, in the different services. I'll have an example with me on that later, on how that works and what the effect is. We are installing so-called product centers, not as something new, but where we bundle the know-how within our existing management and workforce on defining best practices that we're doing on various sites, and then rolling out those good practices or best practices across the site. That increases the efficiency. That means for us a higher margin, but also higher attractiveness for the client, as we are also more efficient for them. So that has a big impact on profitability. And what we will also do more and more, and we're seeing the first examples, I have one with me as well, is bundle these individual services into solutions, to increase the efficiency from us and to reduce the complexity on our client side. So moving from single services to multi-trade, where we already are, to the next step then, these bundled solutions. Digitalization and innovation, again, you have seen all the beautiful tools and apps that we have upstairs. You have also seen, hopefully, our drones. That is one example where we're using in the offshore oil and gas industry, but also within confined spaces. When you have a tank, you're using drones to do inspection services. So again, it requires less manpower. It also exposes our colleagues to less too risky environments. And it combines individual things that we are doing. We are also using the first robots. This is right now still dedicated to certain use cases, mainly when it comes to blasting and when it comes to painting. So also there, we're working together with technology companies, with universities, and these kind of companies to find use cases where we can apply this. We bring in the know-how and the intimacy of the client. Our partners, they are bringing in the technological know-how. What do we need for that? Competence development. And again, I said, okay, of course, we will implement the efficiency program when it comes to efficiency, but we also need and will develop the competences to do so. If a worker on site or a foreman or supervisor has to provide a complete solution, not only one services, you need a completely different skill set of that worker, of that supervisor, of that foreman. In terms of technology, in terms of communication with the client, but also contractually. And we are investing 25% of the savings, as an example, into these kind of things. We need to educate our workforce to be able to offer and to execute all of that. And when it comes to standardization, we are rolling out lean management to help us drive these standardizations throughout the group. We are building training centers where we then teach our people offsite on how to apply those different types of working. That will feed into our growth and into our profitability. This is something, it's not new for us. We are taking it more seriously. We are dedicating more funds to that because we want to accelerate it. And this will be ongoing. It's not a one-year effect. We will continue to do so because, of course, the development never stops. Market expansion will feed into our growth because we want to cover the full value chain in all of our existing markets, but it will also feed into our profitabilities because we want to further focus on higher margin segments. Again, engineering or technical consultancy and the bundling of services is something where we see our clients are willing to pay a premium for us, and we will benefit from that. And then we will selectively expand into adjacent geographies. Sustainability part of that we are already starting to do, but this will keep us busy for the next 5 years. First, start with the full coverage of what we have and bundling, and then selectively go into new geographies within the map of Europe that you've seen before. Finally, sustainability partner. Also, this is something where we have started, I would say 2, 3, 4 years ago, developing product solutions for our clients that help them assess their CO2 footprint and reduce the CO2 footprint. Nothing new for us, something that will be there also for the next years, and where we have quite some good reference cases in the meantime. And again, there is quite a lot of level of detail behind that. So we have a plan, we have a timeline, we have an effect on the revenue, and we have an effect on the profitability, and it adds up to the numbers that you've seen before, also then in Thomas and in Matte's presentation. Now, let me give you some examples on how we are already doing this specifically. And I will start with something which I'm really proud of. That's a new product that we have developed. It's the so-called CO2 master planning. What is the challenge for our clients? As you know, we work in the chemicals industry, in the pharma industry, in the food industry, in the steel industry. All of our clients, they have a huge CO2 footprint. And they're all measured significantly by their investors, by their clients, by the public on reducing this CO2 footprint. Now, what you usually see is that our clients, they know their core process quite a lot. If you go to a chemical plant, for example, where really the chemical fluid is flowing around, this is the core competence of our clients. And they have, of course, the capabilities, and they do so to design that production process in a way that limits resources and limits emissions. But if you look at what we call the outside battery limits, so everything around, the surroundings, the utilities, the power generations, things that are much more agnostic was the word, yeah? This is where we come into place. Yeah? This is not in the focus of our clients. This is where we have huge experience, because a boiler is a boiler, and a motor is a motor, and a converter is a converter, no matter whether it's in the steel plant or in the chemical plants or in the refinery. It's always the same equipment, and it's always the same way we operate them. And this is where we bring in knowledge. So we have developed an approach out of our technical consultancy teams, where we go to a site, not in the core processes, but everything around. We assess all of the auxiliary equipment and how it's managed and how it's operated. We measure, for example, the effectiveness of the insulation. We measure the efficiency of a drive. We measure the CO2 emissions of a combustion systems, and we benchmark it. Because we have this know-how also out there on how other companies are performing when it comes to sustainability. So we go there, we measure it, we benchmark it, and then we go into meaningful discussions with the clients on what they can do differently. And we have done quite a few of those projects, contracts, product services last year. They have been adding up to a CO2 saving, a yearly CO2 savings of 120,000 tons per year. And if you remember our Scope 1 and 2 emissions, this is more savings that we have generated our clients only through this one than we, as Bilfinger, pull out every year. So you see, we have a huge impact on the CO2 emissions in the industries. And this is, by the way, these 120,000 tons, that's not only the ideas from us, those are really those ideas that the client has implemented and where the plant is now operating in a different model. Of course, we are coming up with much more ideas, but then we also always have to calculate the cost-benefit issue. So this is really those things that have been implemented. So this is real savings on the CO2. But we cannot only do this on paper, we can also do it in real life. And this is where really the beauty of our business model comes, as we are covering the full value chain. We are also doing the things that we are proposing. Another example here is electrification of boilers. The chemical plants, the steel plant, many other plants, they use a lot of hot water, steam, hot gases. That all has to be heated. Now, in the past, that heating was done in boilers who were driven by coal, gas, and oil. That's not good for a CO2 footprint. In the future, all of those boilers will be powered by electricity, and the electricity comes from wind, from solar, or from green hydrogen. And as an example, we have been working with one of the biggest industrial parks in the Netherlands, where we have designed the new e-boiler system, so taking it from conventional to electricity. We've designed it, we've done the detailed design, but we also took out the old boiler system and installed a new boiler system. And that again is something which is very unique because, again, you will not find a lot of companies within Europe who can do all of that. And this is how we really add value to our clients. In that example, it was 30,000 tons nearly of CO2 reduction within 1 year, year by year by year by year. And this is something where we distinguish ourselves from those companies, from those peers who are only providing single services, individual services. And you will see us doing more and more of that. And these examples also you can see for in the chart where we've shown that we have doubled our revenue within those green technologies, green services. That's just 2 examples of that. I just realized the time does not count the minutes, but it's the time. Okay. You see me doing this for the first time. Okay, I'm learning. 5 minutes to go. Bettina tricked me on this one.
Fine.
Yeah, oh, that's good. Sorry, back to serious. Standardization, we were talking about standardization. To give you one example, how are we going to do this? Again, this is a live example. You see a beautiful scaffold that we are building behind that. And we have, I don't know how many tons of scaffolds standing around and being built and being demolished day by day across Europe. Now, what we did in Belgium, we were looking at the typical level 1 scaffold. This is, that's quite an unexciting level 1 scaffold. And we are building this everywhere across Europe. What we did in Belgium, we went from one side to the next, and we were looking at the crews and how they are building these scaffolds. And someone was standing there with the stopwatch and taking the time and looking how they are building this. Where do they start? Where do they finish? Believe it or not, there is a huge time difference on how this work is executed. The result is always the same. It always looks like this. But some of the teams, they managed to do in 13 minutes, 1-3. Some of them, they required 45 minutes because they did it in a different way. So what did we do out of that? We defined a standardized way on how to build such a scaffold. We've done the technical documentation. We put that to our training centers that we have in Bene, in Zwijndrecht, and in Roosendaal as an example, and all the new scaffolders that are coming or when they have the regular training, they are now trained to do that kind of job, not in 45 minutes, but in 13 minutes. 70% less time. benefit for us that, of course, we partially move on to our clients. And as I explained, we will do this more and more and more. We are organizing ourselves also around product centers who will drive this type of standardization. And now comes my favorite example. Shell Moerdijk and rope access. This is a very nice example on how we work more and more together with the client and how we can add value that no one else can. Shell Moerdijk is a big chemical plant outside of Rotterdam. We have started doing work there since 1969, when we had our first framework contract on insulation. And since that time, day by day, week by week, year by year, we are there on site and work together with Shell. No day without us on that site since then. In 2012, we've added another service, is painting. Now in 2020, we've added engineering. And in 2021, we've added mechanical, piping, rope access, and inspections. If you go to that big chemical plants, you will not find any peer from us that can cover all of the services that we are doing. And that puts us in a very good position. In the remaining 3 minutes, I want to give you one example of that. And that is inspection at the loading dock with rope access. What is a loading dock? In the end, it's an area that is, like, say, 30 meters high, 10 to 20 meters broad, and 100 meters long. You see a picture of that there. It's full of pipes. It's pipes everywhere. And these pipes are insulated. So every 5 or 10 years, you need to check the quality of the insulation of the pipe. And where they're not good enough, you have to replace them. What is the conventional way of doing this? In the past, Shell goes to a scaffolding company comes, builds up the scaffold. Then Shell goes to the inspection company. The people from the inspection company, they go up the scaffolds, they visualize and they take a look at the quality of the insulation, they write the reports, they're going down again. Then Shell goes to the next company, which is usually a mechanical or an insulation company. And the mechanical guys and the insulation guys from the third company, they're going up, they're exchanging the insulation, they're going down again. Then Shell goes back to company number 1, to the scaffolding company. And the scaffolding company goes there and takes away the scaffold. Now, what we have to develop together with Shell on that side is doing all of that through rope access. The gentlemen who are doing the upseiling and up-climbing here all the time. So we have bundled all in this into one. And our rope access people, they went there, they did the inspection, and they also did the exchange of the insulation. We did not have to build a scaffold. And that means that the total costs of that were 60% lower than during the conventional approach. And in addition, that also meant that Shell has only one point of contact, only one contract, not 3 or 4. So we reduced complexity for Shell as well. And we're taking on higher responsibility in educating the work. That moves us up the value chain. And finally, the whole program in the past always lasted 6 months. We were able to execute it in 2 months, 4 months less time. What's the result of that? Good reference case for us. And now, as we're talking, we do the next 200 meters at Moerdijk with exactly the same approach. So I still have 1 minute. So this hopefully shows you why we are in a good market, why we can grow above market average because of our strong position that we already have, and how we will further bring our EBITDA margin to 7 to 8% midterm, and that there's also good examples that we utilize already, and that there's a good plan behind that. Thank you.
Good. That with the watch, we
I need to train
about it.
Anfängerfehler.
Okay.
Questions?
Yeah. You have the possibility to pose direct questions after the segments or in the wrap-up session in the end. So,
Okay, good.
Let's move on.
Thank you.
Yeah.
Thanks a lot.
Thanks.
And the next one is Christian,
Yes, sir.
our Norwegian colleague, responsible for the Middle East and North America, what we call EM International.
Thank you, Thomas. So, Christian Rugland. I'm, in addition to international, I'm also part of the group executive management team. So, I'm going to talk about the international segment, which is North America and the Middle East. And both regions have a a huge market potential within oil and gas, petrochemical, energy, and also public infrastructure. And within those areas, we have a highly achievable growth plan with significant upside potential. We expect the addressable market growth is around 3%, which is higher than Europe. That is because of strong fundamentals and high GDP within the countries we operate due to their oil revenues. The self-propelled growth will be driven by increased customer demand. It will be transition of services into existing and adjacent markets, as well as bundling and integration of services. So why only 3%? Well, we in the international segment is still in a transition phase where restructuring is going. We have, as you can see, over the last few years been burdened by losses within certain part of the segment in the construction industry. We are in the completion stage of the construction projects, and we hope that 2023 we should be done with them, and thereafter we do not have any more construction projects of that nature in our order book. The profitability target of 5 to 6% is realistic. Efficiency program will reduce overhead cost and upskill our people. The improvement on operations excellence are due to excellent and efficient execution of work, as well as low-cost operations enabled by digitalization. Most important is the positioning and having profitable growth. Not always easy, but we've done it before. And if you look back to 2022, for the Middle East region alone, the region managed to increase its sales by 35%, while also improving on margins and profit. And how did we do that? That was by accessing the right clients on the right markets on the right terms. So market conditions and drivers in the international segments also differ slightly from Europe. Inflation come in a wider expectancy range and will be dominating over the years to come. It's a fair bit of overregulation where countries protect themselves. The strict nationalization and localization programs, which are aimed at stimulating domestic growth, add cost to international companies. Also, in particular, the Middle East region is home for some of the most long-running political conflicts globally, and some of them still exist. Volatility, well, we see that business conditions continually change, thereby increasing the risk for unexpected performance by companies. Now, with climate change also comes vast opportunities within energy transition. And to achieve the net zero 2050 targets, more than €1 trillion of investments are required between now and 2030 when for the target to become climate neutral. And several programs have already been initiated, and both in the United States and in the lead GCC countries. And within this market, Bilfinger is uniquely positioned to take advantage of projects and programs within energy transition and sustainability. So I'll tell you a bit about what we do between North America and the Middle East. So overall in North America, Bilfinger companies have been more than 100 years and about 50 years in the Middle East. We serve about 200 customers in 10 countries and have more than 6,000 employees. Within consultancy, we help clients with feasibility studies, plant efficiency, HSEQ, and sustainability improvement. And there's a search on sustainability. One interesting example of some work we do is together with the government in Abu Dhabi to develop a sustainability hub to educate and inspire its population to go green. We're a recognized provider of specialized engineering from concept, detail engineering and design, management consultancy, and project handover. Most customers are within oil and gas, working for the national oil companies. However, we do also a fair bit of work for within public infrastructure, where we do management consultancy and engineering on roads, bridges, ports, and airports, as well as for foreign direct investors. And we've been involved in Coca-Cola, DHL, Unilever's plants across the Middle East. New build and modifications, that's where the construction projects are. And you will see those coming down on the next years. So the 40% share should reduce significantly. We will continue to do some within modifications on existing plants where we're currently on, and where there is a maintenance program attached to it. But that is part of our strategy to de-risk the region. Maintenance and turnaround. We have a leading position on maintenance and turnaround, both in North America and in the Middle East. And we deliver a whole range of services from typically that could be electrical, mechanical, inspection, it could be instrumentation and control, rotating equipment, welding, fitting, all those services that are needed to ensure a high plant efficiency on the places we are. We believe also within maintenance and turnarounds, there's a high potential for growth in the coming years. Now, this value chain offers some quite compelling opportunities to cross-sale between consultancy, engineering, projects, and maintenance and turnaround. And let's look at how this is going to look like in the planning period. We will do more consultancy, and in particularly within sustainability, where we target solar. We help customers with defining their ESG strategies, but also projects like decarbonization to help customers to deliver on their 2030 targets. On engineering, we will continue to strengthen our core markets while also ensuring a diversified footprint in adjacent markets. The demand for capacity upgrade within oil and gas, petrochem, and energy continue, and there will also be a higher increase on energy transition opportunities. New builds, I said that we will bid selectively on fewer opportunities, but with a higher margin and a higher return. And they will be in relation to some of the other integrated contracts which we work on. On maintenance and turnaround, we will leverage on our number one position in existing and core markets. We see that the transition of maintenance services into other markets has quite low barriers. For instance, on a plant where we do maintenance, for instance, the electrical or mechanical rotating equipment, the pumps on that plant is the same on an oil plant as on a refinery as a petrochemical plant. So for us, that transition is enabled by having the right skills in the planning phase with estimation and proposal. We need experienced project managers, but then when deploying the labor, that is experienced technician, which we have wide access to, will do the same maintenance work on the different type of plants. So how are we going to do this? Well, on our strategic levers, so the characteristics of the international segment is that we will continue strengthening offshore technology centers and shared service center, thereby securing rapid scale-up with a higher quality at lower cost. People. We have so many good people in this organization, and many of them are also in demand by other companies. So our retention strategy is built on employee engagement, on development, on recognition, on having flexible solutions around workplace and schedules, as well as having a clear plan for inclusion, diversity, and social responsibility. And social responsibility is so important, and people in our organization expect that senior leaders like me and them, and us behind here, all represent the company as good ambassadors, taking the initiative on social responsibility and ESG. Also, another key one is technical skills and multi-skilling. For instance, an electrician who also trained to do instrumentation and control will earn more, and it will also ensure higher workforce flexibility for us. And programs for that are ongoing. Standardization and bundling. We're a solutions partner with one of the biggest consumer goods companies in the US, and through lean and continuous improvement, we save them for millions every year. Also, on bundling, engineering is required also within maintenance in order to ensure efficiencies on the plant and to unlock value. I mentioned about de-risking. We have we do less of the construction projects, and there are multiple reasons for why they went wrong, and I'm not going into that here. The key thing is that as part of our restructuring, and we are now discontinuing those large projects, and we do not have any more in the portfolio. Market expansion. I mentioned about moving into other segments in the same countries, and typically within energy, as being number one in countries like Saudi and in Kuwait, we can use and apply the same principles to do maintenance also within petrochemical and within oil and gas, where we do no work now. But these countries and North America have a huge upside potential within maintenance. On geographical expansion, we will selectively review moving into new countries when synergies are clear, and we can leverage on the capacity that we got in the other countries. Typically, we look at Canada, and in the Middle East, we've been to Oman before, and those who have followed us for some time also know that we exited Oman in 2020 on engineering services. But there's a huge potential for some of our key accounts in the group to go back with them in Oman. And Oman is a neighbor country, and it's in the back garden of where we already are. Excuse me. Sustainability partner. I'll show you an example right away about how we work on sustainability. So, about 40% of energy-related emissions are due to combustion of fossil fuel for electricity generation. This is an ongoing project in Kuwait on the power plant, which is 40 years old, and where maintenance was way overdue. And we've been as being number one there, and we've done many of these chimney upgrades. The customer involved us there to work on the whole process, from water intake into the boilers and all the umbilicals and the pipes, so on, to the chimney and for the emission. And by doing that service on all the umbilicals and pipelines, and also replacing the inner pipes of the chimney, and you see there are the elbows here with the 4 inner steel pipes. The chimney is 200 meters tall. Also installing a emission control system for the operator to take action when that sort of goes out of the normal. We help them reduce 76% NOx and SOx emission. The project is ongoing. It will complete in March, and so far it's been conducted on budget, on time, and without any incidents or accidents. The second and last example I'm going to show is with US biggest manufacturer of consumer goods. This is a contract where we deliver a whole range of services from all blue-collar trades and also to management consultancy. And the part this relates is with the management consultancy. It started off as a constructability program where we reviewed engineerings and drawings which were made by themselves. We found so many inefficiencies in the processes and the production lines, eliminated waste and sharpened it up, that we were taken in as a strategic partner with the customer, and now working integrated with them on all engineering and all scheduling and all budgeting. And there is a strong effort on working on sort of the behavior and the culture of continuous improvement. And as part of that, we also set up this amplified value program, which is to which there is also an element of digitalization. And on every site, there's a screen looking like this. And in the mornings, when the crew and the team gathers, they'll normally do that in front of that screen. So they will have their morning coffee and sort of have the planning talks in front of that, where they also will have access to all best practice across all sides of that customer. Now, over about 1,100 customer-approved initiatives, we had some more, but they approved 1,100. We helped them save $60 million last year. 60 million. That's quite good. And we will strive to achieve that position as that solution partner, also with other companies. Now, to sum up, we're still not fully restructured. You need to give us a little bit more time, and we will complete the construction projects in the US. However, it's not a fundamental problem of construction projects. We have some very tangible, low number of projects which will complete this year.
And now we come to the segment technology. Thorsten is the president of that gang, doing the projects and actually quite good in all the hydrogen and other things, what we do there. Please, Thorsten.
Thank you, Thomas. First of all, welcome from the technologies team. My name is Thorsten Hoppe, Executive President Technologies, 3 years with the company, member of the GEM. So I'd like to re-anchor my presentation about 3 subjects. First of all, it's our financial aspiration. Second, it is our transformation process. And thirdly, I'd like to give you a couple of examples of the projects we are looking forward and how we want to really concentrate on. Let me start, first of all, with the growth targets. As Thomas rightfully said, we are not doing projects just for the purpose of projects. This needs to have a sense in the Bilfinger supply chain. That is for us extremely important, that our projects must end in a maintenance contract, or that through maintenance work with our existing clients, we get then a new project. Very important for us. We are in two verticals. We are in pharma, biopharma. We are also in the energy business. And in this, we are in specific customer groups. So it's nuclear, it's energy transition, it's pharma, biopharma. And therefore, we see a market growth of around 3%. And if we look then at the additional opportunities we see currently in these markets, it is another 3% self-propelled. So the 6% is a very controlled growth. We don't just want to grow uncontrolled. Secondly, if we look on the right side, the adjusted EBITDA, what you can see, we stabilized the group in recent years. So are we in the belief that the 3% are sufficient? No, absolutely not. We have to do some further homework, and this brings us then conservatively to an EBIT margin of 6 to 7%. How are we going to do that? First of all, the efficiency program is one element which is of importance for us. We, in the project business, we want in a very controlled and defined way bid for projects. And then secondly, we want to execute them in a very defined and standardized and controlled way. So the rest we can get out of the Bilfinger group in terms of shared service. The administration can go into shared service, and it can also be done by our colleagues in the regions. So therefore, for us, it's really a concentration on bidding and executing. Second thing is project excellence. We worked very hard from the Bilfinger perspective on the Bilfinger project concept. So the Bilfinger project concept gives us definitely in the area of operational excellence an upside. And then standardization of engineering work, very important for us. So we want really not to reinvent the wheel with every engineering work we are doing. It's standardized. And you have seen up on the gallery some examples. We really standardize and modularize continuous manufacturing, for example. So that gives us another 2%, 1 to 2%. And then positioning. We concentrate. We want to do repetitive projects in what we are doing. So therefore, positioning for us is very important as well. So conservatively, we think it is around 6 to 7% EBITDA margin. So let me go then into our market. Who of you would have thought that he thinks about energy costs when working in an office or when having employees in the fabrication? Who of you would have thought that he is ordering an electric car and it's not arriving, and after 1 year the contract gets cancelled because the car probably doesn't arrive in the next year either? Who of you has an ill child and doesn't get the drugs your child urgently needs? And these are all urgent questions, and they describe the environment we are in. It's about deglobalization, it's about energy costs, it's about climate change. And you see here a couple of key statements from our clients. We are in, as I mentioned, pharma, biopharma, and here it's blood plasma client, enhancing human life, or RWE. It's a very long client of us. We have really a very long history with them in conventional energy, in nuclear energy, and now they are going into hydrogen, so into green technologies. So that's another client of us, long-lasting. Then lithium batteries, another client, or EDF. There was this question earlier today, how is Hinkley Point doing? Hinkley Point, we have 3 contracts, or we have even more, but let's say 3 very big ones And EDF is with Hinkley Point aiming really or trying to get forward to net zero. And this is one of the projects in the British expansion program. It's 3,400 megawatt roughly. And in the UK, over the next couple of years, 24 gigawatts of nuclear power and then net zero type power will be built, either in the big plants like Hinkley Point. There's the next generation, which then is, and I think it's all public knowledge, Sizewell. There are further projects, and they are all coming up. And it's not only in the UK. In France, 6 have been decided to be built. And it's not only these 6, because we all know they need something to export, so there will be further plants, and we need to import that. So that's further. And all of that requires then also that there is a waste treatment, that there's a waste handling. And either it's directly per site, or it's at centers, at nuclear waste centers. We are in it. We have more than 50 years of experience in nuclear, in the nuclear industry. What I probably should also mention, that for the Hinkley Point project, we are meanwhile tier 1 supplier, which gives us then always the entrance into the next one. So therefore, I think it's really conservative, and we try to be very careful in terms of growth. So with 3% market growth, 3% self-propelled, 6% to be really conservative. Okay, let's talk about technologies today. First of all, very important, I spoke about transition. You see we are stabilized, quite important for us. Now on the upper, you see the value chain. In terms of value chain, we are currently in automation or digitalization, next step of it. We are from engineering, new build to maintenance. What that means, originally we are very dominant, obviously, on the piping installation, but it needs work before and after. We are the ones who are doing the projects. We are 90% of our business, or 95 even of our business, is project business. And in terms of verticals, as I mentioned, from existing contracts, you see us very much in pharma and in energy. There's also there are some other places like chemical and oil and gas. So revenues, what you see on this slide here, we tried not to grow, and that's also what you heard earlier. When we go from 35% to 20%, we want to do that in a very controlled way. It's important, this really, we want to do it in a very controlled way. There are so many projects in the market, but we try to do it very controlled, and that's what then goes also when we look further into the future. We will not just triple or whatever the number of projects we currently could get. That is not our ambition. So where do we want to be in the future? Here you see the value chain again, and that is very important. We want to just concentrate on engineering and on project execution, so the new builds. When it comes to the maintenance, my colleagues Jürgen or Christian, they have the experience. They know exactly what they are doing. They are recognized for what they are doing. They take them over. So we will exit that part. We will really focus on the project. What is also important in terms of projects and the project definition, we all know it's a very difficult one to get. We do not just throw in a fixed price to do a certain type of projects. No, that's not the way how we are working. We work through the various phases of engineering, and that through these phases of engineering, we can understand the risks, we can understand the pricing, and then at one point, when we went really down to a detailed engineering, then we say we execute the project. That is good for us. That is also good for the client, because if we would do it right at the beginning, we would have to say otherwise the price is rocket high. And through that process, we also get into a risk corridor and into a contingency corridor, which is really realistic. We understand the project before we really price it in. So we want to be the project company in Bilfinger, and doing 100% of the projects in the future, focusing really on nuclear, new energy or energy transition, and then on pharma and biopharma. And our clients, that's also very important, our clients, we want to do repetitive projects. We want to have the proximity to the clients, strategic clients, and they will guide us through their next investment. And we have a couple of very successful cases or clients in recent years where we really go almost in a standardized way from one project to the next one. In one case, even that we are building now the 4th time the same project of its kind. And that must be our ambition. We don't want to reinvent it every time something new. That's not what we are going for. All right, let's talk about the main levers, because we still know we have homework to do. And you see here a very busy slide, or the next 2 slides are very busy. I have one colleague who is always saying, if everything is important, nothing is important. For us, of main importance is really de-risking standardization. As I explained, and also Matti very well explained earlier in his presentation today. That is for us key. And that starts with the Bilfinger project concept that goes on with repetitive projects, and also the way how we review that with KPIs and how we follow a project. The second thing I'd like to mention on this slide is the competency, or the competence development. We need young engineers. We need people executing the work on site. We have our own training center for welders, and for Hinkley Point, for example, 8% of the people who are coming to us get finally the certificate from us for welding. So we need hundreds of welders, for example, for Hinkley Point. You understand, we have a huge, let's say, training center where we develop our people. That is on the execution side. When it comes to white-collar people, for them it's really important what are they doing, on what type of projects are they. And we believe, on one hand, that with the energy transition projects we are in and continuing and even focusing more, that is something where people can work on having an impact on the footprint. On the other hand, on the other side, when it comes to pharma, biopharma, it really has an impact on the well-being of people. So what we did in recent years, we did some networking exercise. We really looked how can we upgrade our talent management? How can we take a young engineer with us, developing him forward, either in the project side or also in the when it comes to engineering, from young engineer to senior engineer. These are programs we are taking a lot of care. Then also in terms of leadership or in general talent development, we have a clear talent development pipeline and plan how we bring people not only just in a vertical way, but that they understand Bilfinger and that they then can add really value to the organization. Quite important for us. Then in terms of digitalization and innovation, we have one business, a larger business, hundreds of young engineers. They are doing automation. So for us, it's quite important that in everything we are doing, we add the automation component. As you saw upstairs in continuous manufacturing, more than 170 connection points in automation to introduce continuous flow. So we try to bring this very close to whatever we are doing, whether it's in a hydrogen project, whether it's a pharma project, whether it's in a nuclear project. Really important for us to bring further intelligence into what we are doing. In terms of market expansion, first of all, obviously, I think in the meantime, I explained it. We look really to follow our clients where they are going with repetitive projects. I have a couple of nice examples there recently. Went, for example, to US. On the other hand, it's repetitive process. It's a repetitive project. It is also that we want to be, and we develop even further as a solution partner. We also bundle whatever we have in Bilfinger. So it is not that we then as an, let's say, segment are going out with a certain type of approach to the market. We can add scaffolding, we can add isolation, piping, sometimes also mechanical work in the regions wherever we are operating in. So we try to add this. And then we obviously want to grow in the energy transition, or what Thomas described earlier as green energy. That is for us where we want to be in the future. And then sustainability, having a CO2 impact, quite important for us. And that drives really the type of projects we are doing. It's either hydrogen, it's carbon capture, it's biofuel. This is really the space we are in and nothing else. We are not trying anything else. And then nuclear, I described already, also important for us, will be important for us, will be an anchor for us. So I'd like to give you now a couple of examples. And I could speak now about hepatitis production, where we deliver process skids. I could speak about insulin, where we deliver skids, or also everything in blood plasma. I think what is important for us here today to see with our standardized skid production in pharma, biopharma, what else can we do? We are in extremely specialized food, very close to pharma, biopharma, and we are working non-stop with expert groups to see what can we do with this experience we have in engineering, and we have also in skid manufacturing. And here's one example, and it's really an example which has a solid CO2 impact. This is vegan cheese. So or cheese for vegans. What we are really doing here, or we developed with expert groups, a process very similar to what you saw up with the reactor and the continuous manufacturing. We are now in the process of final design, going into a first pilot plant, ramping it up to a demo plant, and then finally the full plant. And what this example describes so well is, first of all, standardization makes it possible to reduce time and costs and risks when going into something. Secondly, is also that these vegan production or vegan cheese production really delivers a bottom line impact on CO2. In this case, and Thomas really sometimes is laughing about it, 600 cows for one reactor, okay? That replaces 600 cows for one reactor. Think about it when we are really going with that into the 10s or 20s or 50s type of reactor. And we want to do repetitive work, so it's also an example for repetitive work we are doing. Second, biofuel. We also, where we went with a client from the various engineering phases into a first little plant, and then now here's a bigger demo plant. It's in Norway. Norway, whoever was there in recent time, this is really the country with many electrical cars. What is the challenge in Norway? The trucks are still going with diesel. What is another challenge is that wood volume is constantly increasing, because previous applications for wood, they don't work any longer. So over years, in a partnership, what we developed is out of cellulose to produce diesel. And this plant we just finished, it's running, it's working, also in bigger scale. It's really producing biodiesel. And now it gets really interesting because now it's going into full plants, which will be immediately at various sites in Scandinavia. Strong impact, the way how we designed it and how we fabricated it. We have one fabrication site, a larger fabrication site, where we really look for continuous manufacturing and how we can reduce lead time and how we can make it more efficient. So that is on one side the impact. On the other hand, obviously, what you can imagine, biodiesel, huge impact on diesel engines. And then third example, showing you what we are able as the Bilfinger team to deliver. This is with our long-term client RWE, the H2 production in Eemshaven. We won this project. We have certain expertise, solid expertise in gas treatment, and obviously with our balance of plant capabilities as a system integrator, we won with the technology provider that plant. It would not work out if we then try to every time develop the full technology. We don't want to take this type of risks. That's not our business. But here, as a system integrator, with our expertise in this market, we won the first project. After quite a good series of engineering work. And what we will do here over the next period of time is to be very careful in choosing our technology providers. There will be some for the smaller scale modules and some for the larger scale modules. And with them together, we are working on this huge need for H2, which then goes either in hydrogen pipelines or what will be used then even for steel production in the future. We are in it. So therefore, let me conclude and recap. I think we are in the right markets and we are very selective markets. We know the homework we have to continue to do. We are only doing projects if they make sense in terms of the value chain. And then the first element is that it's all about our EBITDA margin. And conservatively, we are certain we can get to the 6 to 7% area soon. So thank you. With that, I'd like to give back to Bettina.
So now it's about what we call the wrap up. And yeah, no surprise with which kind of slides we are coming here. What we told you today, what we introduced today to the public is on one side a clear path to improve our operational excellence with quite a lot of profit gain in it. And on the other side, a new part in our history, in our company DNA, to position us completely into efficiency and sustainability improvement for the client, which we hope you understand it's a huge market with a huge demand, what we have in front of us. And to play in that market, it is important to be the solution partner of choice for your clients. Because if you are only in one country, the one who helps a client, and not in the others where the client is established, then someone else can get in between and kick you out of that one country where you are in connection with the client. So we have clear financial targets, 4 to 5% growth. We promise and we deliver 5% plus in 2024, the 6 to 7% EBITDA in the years to come after, the 25 to 27, and of course in the cash conversion, more than 70% in 2024 and more than 80% the time onwards. We explained where the market is coming from, how we see the market, how we define the market, and what our addressable market growth is, and especially our self-propelled growth, which is a gift for the company. to offer that what we do already successful and profitable in all the countries where we are already today is a self-propelled business growth where we have more or less no risk in it because we know how to do it, we know the clients, we know the countries, we have the local people. That's a big added value. And on top of it, we have the opportunity to make so-called scale deals, bolt-on acquisitions to strengthen the core of our company and not going into unknown endeavors. The business model, what we run here, is clearly that we earn money by enabling our clients to earn more, to improve their profitability through efficiency and sustainability improvement. Is that where we will earn our money on? The number one means if the customer needs efficiency improvement, if the customer needs sustainability improvement, it's about Bilfinger. That's the number one position. It's not about the size, it's not about in how many countries we are or anything else. It's really about the reputation, the competence, what we then have in the industries wherever we act, that we are the number one in helping them to improve efficiency and sustainability. We outlined, actually quite detailed, which kind of strategic levers we use for it. And as I said this morning, it is important that we communicate very transparent, ongoing to you, and that you can judge us on the KPI, on the timeline, on the strategic levers. It will help us that we are easier to read in our performance, and it will help us internally to get the accountability up in the whole group and getting that back, what is very important for any business, to have a lot of self-confidence when you go out to the market. If we look in what we are today, we cover from consultancy to maintenance and turnaround quite a lot, supported heavily by digital. We are in 3 main areas with the Middle East, North America, and Europe. We are with 35% projects. And you see on the right bottom side of that slide, how we are covering the different verticals, the different industries where we're in. The tomorrow of Bilfinger looks like that we are in the areas where we are today, but we are 80% recurring, low risk, high profit, recurring service and frame contracts. And we change our industry mix quite significantly into energy more. We keep chemicals and petrochem are more or less the same level. We decrease oil and gas, we decrease significantly others, and we increase pharma and biopharma. In the offering, the engineering, the new build modification, and especially the maintenance and turnaround is a big part of that, where we will be market leading throughout the areas where we operate. Out of that, Matti will go on the financial setups and capital allocations.
Yes, so revenue growth, EBITDA progression, and cash generation will drive our ability to continuously grow our net profits and hence continuously grow the dividend. We continue to work hard to get to investment grade rating. We will fund our organic growth. As Thomas said, there is M&A. If it fits, bolt-on, adds to our capacities and competencies. And as we said earlier, finally, share buyback as an option also to drive total shareholder return. That's the plan that we have hopefully very well explained to you. Thank you very much for spending the time with us, for being here with us, here or on the stream. That is what we're striving for. Number one, for our customers in enhancing their efficiency and their sustainability. Bilfinger leading in industrial services. Thank you very much. Over to Bettina.
Yeah, the last opportunity for today, but definitely not the very last opportunity. We hope that this conversation, that this discussion will be today have a new starting point going into the next weeks, months and years. But still, again, if there's something left for today, we would still try to answer your questions here or in the stream. Well, I think.
Actually, on a more personal note, when you stand here on the stage, you can imagine it's quite warm, and climate change. Huh? And of course, if you don't get questions, you think always, was it well explained, and so on. We are very, very open for feedback. That's clear. Communication is not always to give us only the nice words, but constructive feedback would be highly appreciated. So I guess no further questions.
No, not for today, I would say.
Okay.
So Matti, I think we are done. Thanks a lot to the colleagues. Thanks a lot to the whole team who did a fantastic job since actually the middle of last year, especially the Team 12, the whole organization where I hope quite a lot are watching us. Great job. Top people, top company, top future. Thanks a lot.